And as I was sort of alluding to there just a moment ago, we go and look at things like inflation rates. If the Fed does not, or if it starts going, oh yeah, UN, you're right, we should probably lower rates. This inflation rate is just going to crank higher here. Now, the one good thing about this is we're still fighting at this 2.618. So if the Fed can get religion here and can actually top this out, which means I'm going to have to inflict more pain in your people's lives, and we fail here, then we should come back and kiss that original breakout level. That's what I've noticed happens with these chaos thinking, which would bring inflation back down to 2-3%. If they can officially say inflation's back at 2 to 3%, see everybody, we did exactly what we were supposed to do. What you might find is we just bump along something like that for the next 5 years. That wouldn't surprise me at all. So this is a really important junction. And what is the anecdotal evidence that indeed they have gotten in front of this? There's going to be sort of like retail price inflation. So that's things like your natural gas price. So what's natural gas doing right now? Right, this is everybody has to pay for it. And of course, we know that this winter, this is the big political football. Let's go out to a weekly chart, weekly commodity trend survey kind of conversation. On a weekly basis, have they actually broken this natural gas market yet? Moving averages are still pointing up. So I don't think so. What I did notice, if you look at that daily chart, is it looks to me like there's a head and shoulders at play here on the dailies. So, and I suppose this is all predicated on what the hell's going to happen this winter. Daily basis, we're still pointing down. The only problem is we just banged into long-term, moving average support. We're below value. And unfortunately, seasonal, the trade, just like unleaded gasoline, you buy your unleaded the middle of February, sell it the middle of May, made money 9 out of the past 10 years. Well, now we're actually talking about the heating oil market. So this is New York Harbor ULSD futures. Oh my goodness, there's one. This used to be heating oil, HO. You tell me what letter of the alphabet's coming in there. And this is the exact opposite of the unleaded gasoline trade, right? So in this case, you buy your heating oil the middle of September, October, you sell it the middle of January, February, you made money 9 out of the past 10 years, blah, blah, blah. So the point here is we're back against sort of key support here. That low there, that low there. All right, of course, there is Vladdy's insanity and all his military crap. Is any of that changing? No. Usually these international wars usually last a couple of years. After about 2 or 3 years, the local population gets sort of sick of the whole war message. And I was watching videos yesterday and stuff. I mean, it's just horrible what these damn Russians are doing to the Ukrainians. It's sickening. But the point of the matter here is now we're coming into the seasonal window where if you're going to be looking for bottoms, that's exactly where you want to be looking. And I mean, I'm not quite sure. Maybe this market has rolled over on the weekly basis. I would imagine it probably has. Yeah, so we crossed there. Let's see. This might be a good example where we got the bearish cross, the check of that cross, and now we're going to find out whether this is for real. And sometimes you actually just see it goes like this, and then it turns back up, and these moving averages start crossing bullishly again. So is this a buy signal like on investment grade? I don't think so. I think we're pretty far away from the bottom. But I just don't know whether, I mean, heating oil wise, that has not, well, technically on the weekly basis, we did get the bear cross. Is that a massive head and shoulders top? Tough to say. If you start to see prices appreciably below here, then I think we have broken. But I don't think you're going to see that given what this looks like here in the short term. That is now like a brick wall of support. down in that area for the time being, and it looks like they're going to take the market back up here. So more importantly, right, obviously natural gas is the big sort of question du jour. Can the Germans go and secure enough supplies from the Americans and the Saudis and all the Mideast suppliers to offset that dependence on Russia? Of course, we all said that Vladdy's sort of big punt, if you will, was a bet there. I don't know how that's going to play out, and I wouldn't be a betting person to say that this is going to end easily. I think it's going to end very painfully. So that's the retail prices, and then of course, how are things like grain prices doing? And of course, if we use another political football, wheat prices. I think that they have come down quite a bit, and I put out tweets kind of to this effect that I actually think that we had a bit of I'm going to call it a deflationary spell. I don't know how else to describe it. Basically, this is gold prices, as a proxy of inflation. I think that's pretty good. You can see just this most recent sort of seasonal window, May, June, July. And actually, yeah, interesting, sort of the beginning of the year, we actually topped out sort of inflationary pressure-wise. Now this thing is turning back up, but what scares me is looking at an image like this. So that MACD histogram clearly in bullish div. This is not necessarily a buy unto itself, but a W in MACD histogram with Willie being stupid. If you get any kind of W here, the damn thing is a screaming buy, and it's going to go ratcheting higher. Still probably a little bit early to call a actual gold bottom, but could we see this thing just dead cat bounce straight up into things like the POC as we get big sort of now you've got the grain prices. Half the reason why this happens here is they get a pretty good idea of what the crop's going to look like here. And this is basically what they call a supply-driven market, where what's the size of the crop that's coming to harvest. So in this window, this is actually harvest season. Then we start getting pushed into a demand-driven market. And the question here, of course, is now that Ukraine isn't supplying as much wheat to the marketplace, what's going to be the demand for this grain heading through the winter months? And you can see, coming out of last year, that was the whole impetus for this rally. So there's September, October. This is your fall harvest. And then we're heading into the demand-driven part of the market. And you can see with who doing his crap there in Eastern Europe, everybody freaking out about what's the prospects of the world running out of grain and wheat. And of course, everybody went and loaded up on wheat, freaking out. So not necessarily calling a new bull, but what I would definitely say is from a seasonal perspective, the deflationary push that I saw happening in our society, that's kind of abating. So interestingly enough, from a retail perspective, like what you're going to pay at the grocery store, what you're going to pay, for your monthly heating costs, what you're going to pay for, filling up your gas tank, that pressure looks like it's heading back up.